Hi, welcome. This is Mary Ellen McGonagle with your Daily 5 for Tuesday, August 30th. A little bit of background for those of you not familiar. I do have over 25 years of experience both with and on Wall Street. I did manage over $2 billion in assets in fixed income at the beginning of my career. From there, I joined William O'Neill & Company, the founder of Investors Business Daily, all about uncovering that next big winning stock just as it's poised to take off. I carry that information and that educational background with me as I founded MEM Investment Research, now being founded by simplertrading.com. I'm the author of a top performing MEM Edge report that comes out twice weekly. You can find out more at meminvestmentresearch.com. So today we are going to be taking a look at some pockets of strength that are being revealed here in a very difficult period. We currently are in a downtrending market, certainly from my work. And one of the concepts I did want to share with you today is that if you are aware of synergies that can take place and are currently taking place between stocks and select macro events, this is going to help you navigate this currently difficult market environment because those events are bypassing what's taking place in the broader market. So let's jump right in. Macro events that can and do drive price action in the markets. First up is that interest rates, they can have and do have a very powerful impact on select areas of the market. I will share that with you. And then more than that, share with you positive areas that are benefiting from the current rise that is taking place in interest rates. Next up, global events are also going to be a primary driver of price action. I will get into that as we move forward. And supply demand dynamics. These dynamics will oftentimes override that broader price action that currently is taking place by way of a downtrending market. Also, industry groups will then in turn rotate in or out of favor. So let's take a look from here. First up, I'm sharing with you a daily price chart of the Nasdaq Composite, and that is this candlestick chart here displaying a daily view of the Nasdaq Composite going back to last October to where we are currently. And then overriding that here is a line chart of the yield on the 10-year Treasury. And what I did want to point out to you here is the very distinct correlation that as interest rates rise, you will see a decline in the Nasdaq. And that's primarily because the Nasdaq is filled with high growth names, technology, consumer discretionary, and other areas. And as interest rates rise, the future value of the earnings in these growth stocks deteriorates. So hence the interest in these growth names will decline. So you will see in particular here, the Nasdaq deteriorate as rates rise. So let's go ahead and move forward. There was a period here recently from mid-June into August where interest rates were in a declining phase. We did see a very nice rally take place in the Nasdaq as rates pulled back. There were other dynamics at play here as well, of course, with earnings coming in ahead of estimates, but certainly that interest rate backdrop was a primary driver. Here, more recently, we have seen interest rates rise. The yield on that 10-year is now at 3.1%, and Fed Chair Powell did come out last week announcing the Federal Reserve's intent to continue to raise interest rates in an effort to keep and lower inflation. So here we can see the quick response here with the Nasdaq heavy growth names deteriorating in response to that rise in interest rates. So let's move on from here to an area of the markets that generally fares well in a rising interest rate environment. I'm sharing with you a view of XLE, that is the ETF for the S&P 500 energy sector, and we can see as energy stocks rise, it is during a period when interest rates are on the rise. This is an historical precedent that has been true for many, many years. And then we can see this period here with the energy when it pulled back, this sector pulled back from June into July. When interest rates were declining, you can see that energy very clearly pulled back. More recently, interest rates on the rise, and we can see that energy stocks are also on the rise. Now, this is another area that also has other dynamics at play, and in particular, the price of crude oil is rising, but that's another occurrence that takes place in a rising interest rate, rising inflationary period. So being aware of that can help put you in front of these names. I know with my MEM Edge report, we got into energy back here in the beginning of January, the beginning of 2022. The broader markets in turn fell into a bear market territory, but energy stocks continued to outperform. So from here, I'm going to share with you some select stocks. First up here in the energy space is a daily price chart of Schlumberger. SLB is the ticker symbol. A couple of dynamics that I did want to point out to you here with this stock. It did experience a reversal here. More recently, going back to last week, the stock broke back above each of its simple moving averages, and as the stock is continuing to advance, you're getting very nice high volume characteristics. In addition, your outside momentum indicators are in positive territory, your RSI and your MACD. Also, both areas are heading higher, indicating further near-term upside for Schlumberger. The company is on track to produce earnings that are going to be 59% greater than last year, and analysts are raising their estimates for earnings going into both this year and next year. From here, I am going to share with you another entirely different area of the markets, and this is an ETF for CORN, and that is the Corn Fund. And we can see how this particular ETF had a very vibrant period here, taking us from February into the beginning of May. This is where I'm discussing that broader market global events can impact different areas. And in this case, Russia's invasion of Ukraine pushed the price of corn quite high. And this is all about Ukraine having a very large global percent of exports of corn. And of course, that has been diminished. So let's take a look here at the recent price action in CORN. We can see that it reversed this downtrend with a gap up in price here last week. In conjunction with that, we had the RSI trending upward, nice high volume characteristics as the stock continues to advance while finding support at this blue 5-day simple moving average, the MACD moving average, convergence, divergence, also up here in positive territory. What's taking place now currently is that Ukraine is continuing to have a very reduced output of corn. Their agricultural minister has anticipated that their output will be reduced by at least 40% going into the remainder of this year. And there are other concerns relating to corn and the quality within the U.S. that is also driving price action higher and a very nice confirmed uptrend. And from here, another commodity related stock. This is Steel Dynamics. STLD is the ticker symbol. And the stock last week emerged out of this cup with handle base breakout. And we can see that this breakout occurred on very high volume with your outside momentum indicators in positive territory heading north. Steel stocks have been on the rise, and this is all about supply-demand issues. There is a lot of demand for steel while supply is lower. Also, if we go back to this period with this downtrend reversal in STLD at the end of July, it was in conjunction with the company releasing very strong earnings, 98% in the way of year-over-year earnings growth. From my work, strong earnings will be a primary driver of a stock's ascent when, of course, you can marry it with other dynamics that are taking place. Last up here is a stock that produces lithium, and the company is LTHM. LTHM. It produces this much needed product for electric vehicle batteries. And let's take a look at this stock. It's not the most divine looking chart, but on the daily here, we can see that the stock this past week just emerged out of a cup with handle base breakout, again on very high volume characteristics. The RSI trending upward in positive territory, likewise with the MACD. And this is all about the passing of the reduced inflationary bill, where there will be a record amount of capital that is going to be put toward alternative energy products, and in particular, electric vehicle companies are going to benefit, and there will continue to be a need for lithium, which is the key active material in rechargeable batteries. Also, if we go back to this late July period, that was when LTHM produced earnings that were 825% greater than the prior year, while also raising estimates. So we have strong growth prospects in the face of the backdrop of government spending that will help increase the need for lithium. And that's it for today. For those of you who haven't already, please use that link below so you can trial my MEM Edge report. This twice weekly report will provide you with insights into where we stand with the broader markets, sector rotation that's taking place, and of course, stock selections beyond that. Thanks for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.